Good morning.
Good morning. Thank you for having me.
Yes, I'm so happy you're here. So I'm Melissa Carbonell, if you haven't been on my channel before, and I have a branch of Real Broker here in Florida, in Fort Lauderdale. And today we're speaking with our Broward County Property Appraiser, Marty Kiar.
Hello, everybody. How y'all doing? I just want to thank you so much for having me on today.
Thanks for coming. I really appreciate you coming here to our office to shoot this. And I just think in real estate, we're always talking about this stuff, and every time we do a transaction, people have questions, or when somebody's going to change, like how does this affect their taxes? What are their taxes going to be? So I think there needs to be every realtor in the state talking about property taxes all the time. And we have here in Broward a lot of exemptions and things we can do to keep our property taxes from going up. So that's one of the good things that we have here is Save Our Home. So let's start with one of the greatest things we have for people who are this is their primary residence. They're staying here. They've been here for a while. So how does Save Our Homes work?
Well, and thank you so much for bringing that up. That is such a fantastic question. I love the Save Our Homes cap. That's part of our Florida Constitution. And here's why it's so very important. In many states, if you live in those states and they don't have exemptions or you have to pay property taxes on the property, the value that you're taxed on can go up every single year to the market value. So your taxes constantly go up and up. In Florida, we are very lucky to have something called the Save Our Homes assessment cap. And here's what it means. When you bought your home, you filed for homestead. And when you did that, which is very important, two things happened. The first thing is the value that you're taxed on, $50,000 of value gets taken off the tax, or you don't pay tax on. It can save you, maybe $1,000 a year just at the beginning alone. But the most important thing the homestead exemption does, it kicks in the Save Our Homes assessment clause of the Florida Constitution and basically says that every year thereafter, the value you're taxed on cannot go up more than 3% or the consumer price index, whichever is lower. And why that's so very important is the market, as you know, over the past few years has skyrocketed. And so your home today is probably worth a heck of a lot more than it was last year, the year before that, the year before that. And so your market value is really going up. But because of the Save Our Homes assessment clause, the value that you're taxed on cannot go up more than 3% each year. So even if your market value goes up 60, 70, 80, 100%, the value you're taxed on can't go up more than 3%. It keeps your property taxes manageable if you're a primary resident here in the state of Florida. So I love the Save Our Homes assessment cap.
Save Our Homes is one of our best protectors of keeping our houses more affordable once we buy our houses. I think it's important. And then a question I get, or a comment I get a lot sometimes when people considering selling their home and moving. So these are our upsizers, right? So they want to move to a bigger home, but they are concerned, or a more expensive home, sometimes it's a condo and a smaller home, they're just worried about how much their property taxes are going to go up. So I try to explain that they have portability.
I think it is so very important. Portability is really a fantastic program. It gives people the opportunity to move from one home into another home and not be taxed out of that home. And here's the way it works. When you bought your home, again, you filed for homestead. And again, the most important thing that kicked into place with that Save Our Homes assessment clause that I just spoke about, that says the value you're taxed on can't go up more than 3%. So over time, your market value gets high, but your assessed value stays lower because of that cap. You have all this value in between your market value and your assessed value you don't pay taxes on. And now if you decide you want to buy a home of equal value or greater value, you take whatever difference that is with you between your market value to your assessed value to your new home and don't pay taxes on it. If you buy a home of lower value, you take a percentage of it and you can still save many thousands of dollars a year in your property taxes. Under Florida law, you can move up to $500,000 of value. That's like moving a $500,000 house and not paying taxes on it. You have to use it within 3 tax years to be able to get it, and you can use it anywhere in the state of Florida. And portability is the best, and something that people don't always think about is when you save money that first year. Let's say you save that full $10,000 the first year because you have that entire amount of portability to move over. You don't just save that the first year, you save that the second year, the third year, the fourth year, and that really adds up. Portability is fantastic, and you can use it anywhere in the state of Florida.
All right, so one of the other things I want to talk about is exemption. So if you've seen my YouTube channel, I talk about the Florida condo safety law. It's obviously affecting a lot of seniors. It's affecting them in their 55 and up communities. And so I want to make sure that a lot of them are really taking advantage of all the potential exemptions that we have in Broward County. So what are the potential exemptions that people, doesn't have to be just seniors,
Sure.
do we have in Broward?
So, and thank you so much for that question. You know, the thing I love most about my job is we get to give tax saving exemptions to people that qualify. And there are a lot of exemptions under Florida law that people qualify for. The most important one, we spoke about it just before a little bit, is the homestead exemption. You have to have that exemption before you qualify for any other exemption. And here's how you qualify. If you make something your primary residence, it's where you're registered to vote. If you don't vote, where your declaration of domicile, where your car is registered to, if that's where you live, you get that very important exemption that at the beginning takes about $50,000 of value off the tax roll you don't pay tax on, can save you about $1,000 a year. Once you get that, there are so many other exemptions people are entitled to. Some are very, very large, some are a little smaller, and you can stack all the exemptions to reduce your tax bill. Examples of very, very large ones would be for totally permanently disabled veterans. So if you know somebody that's 100% totally permanently disabled veteran, they are fully exempt from paying all property taxes. If somebody's not 100% disabled veteran, but they're a combat disabled veteran, they get a percentage reduction in their taxes that correlates to whatever their disability percentage is. And if they're not 100% disabled, not combat disabled, but still a disabled veteran, they still get a big reduction in their taxes. There are exemptions for widows. There are exemptions for people with disabilities. My favorite exemption, though, and I'm so glad you asked me about seniors, is called the low-income senior exemption, and I'll tell you why. Broward County has 2 million people that live here. We are a very big county, and about 25% of our population are seniors. And unfortunately, on average, the most impoverished portion of our population are also seniors. And I always think if you can help a senior who's struggling to make ends meet, put a little bit more money in their pocket, they can have a little better of a life. So to qualify for a senior exemption, you have to be over 65 years of age after January 1st. You had to make under right about $36,000 last year. If you qualify like that, you get another homestead exemption on top of the one you currently get. They can save you another $400 or $500 a year. Now, there are some cities that have adopted what's called the long-term senior exemption, and the county commission has adopted this as well. Not a lot of seniors qualify for it, but the ones that do can save a lot of money in their taxes. So if you know anybody that's over 65 years of age, they made under last year right about $36,000, but they've been in their home for 25 years or more, and the value of their home at the time of their application is under $250,000, they're fully exempt from paying the county portion of the tax bill and the city portion of the tax bill if the city has adopted it. Those are just a few examples. There are a lot of exemptions, so please go on our website at bcpa.net, click on exemptions, and if there's something you're not getting, you can contact me by September 18th of 2024, and we'll make sure they're reflected in your 2024 tax bill. I hope that helps.
Oh, yeah, that's perfect.
Oh, thank you.
So on the one exemption, there's 31 cities in Broward County,
Yes.
right? How many have adopted it?
It's a great question. So there are 31 cities in the county, and I believe probably about 20 have adopted the
quite a
long-term
few.
senior exemption, which I'm very happy about.
Yeah.
And I really hope the other 11 adopt it as well. I really try to convince them of this, and let me tell you why. If when you talk to one of your local elected officials, if you live in a city where they haven't adopted it, ask them to adopt it, because anytime anybody has an exemption, anytime you adopt an exemption, it's definitely going to mean less money that city has to operate with. But when it comes to the long-term senior exemption, so few seniors qualify. There's not a whole lot, because you have to be in your home for 25 years or more. And so as a result of that, the loss of revenue to the city that you live in is minimal. It is nominal. They don't even see it. But to that senior who's struggling to make ends meet, it means a lot, and that helps them a whole lot. So my goal is, I'm hoping the other 11 cities follow the other cities that have adopted it, because it is just the right thing to do.
All right, yeah, I hope so too. So long-term senior exemption,
Yes.
That's what we're looking for. Okay,
is.
so that's what we're looking for. Okay, this is the question that everybody has, no matter what age. How are properties valued? And for once you go into that explanation, I do have another question on that for some
It's a
other
fantastic
things.
question. I appreciate that. So properties are valued in a few ways. The first thing is there are 3 approaches to value that we have to take under the law. And it depends on what type of property it is for the approach that we're going to use. Residential property is very, very easily. So basically, there are 2 ways we'll value it. The first way is if it's a property that's existing property, basically one that hasn't changed hands, so you own that property. The way we determine your value is we look at January 1st of the year. That's the date under the law that we have to use to determine your value. And then we look at all the comparable sales from the year before that were similar to yours, hopefully in your neighborhood. We'll adjust those properties for size and location to determine a market value for your property. If it's not residential property, but it's commercial property, let's say it's a mall or it's a mom and pop store that you own, something of that nature, the way that we would value that property is we would look at comparable sales, the same as before, but we would also look and see what the income that property produces. You look at the net operating income, you look at the vacancy rates, you're able to figure out exactly what the value is based on that income. And then there are properties in Broward County that are so unique that there are no comparable sales that can help us, that we can utilize. You can use the income approach. We use what's called the cost approach. We determine what it costs to basically build the property from the ground up to determine a value. And if it's property that changes hands, though, let's say it's a property you buy. If it was what a willing buyer would pay a willing seller, basically it's an arm's length transaction. The next year when we value your property, we're probably going to use your sale price. That's the way we determine the value of property for the market value. But here's what I tell everybody. Right about June of next year, go on our website and look at what we have, the value of your property that we thought it was worth on January 1st. What you can do, if you think that we've made a mistake, or you have information that we don't have that can help us bring down that value, all you have to do is just call me or email me by September 18th and we can work on it, and we can hopefully bring down the value of your property so it would bring down your taxes. See what we have as your value, and if you have any concerns, call me, email me, let's go through it together, because we really only want to make sure you pay on your fair share of value.
And the deadline is in September to get it all done, right? Like
it
you
is.
Have to, is that to file the dispute of the value, or is that
for both?
Okay.
So it used to be that people had March was the deadline for anybody to file for a homestead exemption or any other exemption based on if you were on your property on January 1st. But the legislature gave all property appraisers the opportunity, if we wanted, to move that deadline for good cause till September 18th. Some property appraisers require you to actually show good cause. We were told by the state we don't have to do that, so I just basically moved it. So September 18th is really our deadline that anybody that wants us to work on the value of their property or apply any exemption that they're entitled to, you have till September 18th. That is the deadline to call me, to email me, to come to our office, or let us come to you so we can make sure you get every exemption you're entitled to and that you only pay on your fair share of value.